So in this video, we're going to take a look at how to use the Australian Momentum Report. This is Michael Thompson, Equity Advisor and Analyst at JB Markets. Before we do so, I'm just going to cover our disclaimer. Anything we cover today doesn't take any of your personal circumstance or needs into consideration. And past performance is not a reliable indication of future performances. So once you're on the Momentum Report page, just want to highlight the strategy whether you're executing the orders yourself or we are executing it for you. It's a medium-term strategy that tries to capture stocks, medium-term trends from stocks on ASX 200 list. And the focus of the portfolio is for growth with a strong emphasis to switch to cash to preserve capital during a bear market or correction. And each position incorporates a stop loss, a trailing stop, and a profit target. Now the way this portfolio is constructed is we want to have allocation to every sector of the market. What that's trying to do is that try to capture trends where they exist. Rather than being concentrated in any one area, we don't favor, we simply want to diversify, and wherever the trends exist and due to market cycles, we will be there to capture them. Now let's just go through the new orders and we'll go through a look at how to look at the order sheet. So the order sheet will allow you to calculate your position size. Also, if you want us to place the order, this is what you need to send back. We'll cover that towards the end, but before we do so, let's cover the new orders and how you read the chart of the table to place the order. So your first column is pretty straightforward. It's the symbols column, tells you what symbol we're looking at, the sector it belongs to, and the third one is the closing price, which is for Friday. So this is a weekly. So this is the price we closed at. This helps us calculate our allocation of capital and the instructions on what we're doing. So we use market orders for all our entries and exits, except for our stop loss, which is made set in the market. But market orders straightforward. If you have an order to buy certain stock, you'll be buying at the market on the weekend, so that the order is sent to the broker before the market opens. Now below that you see a corresponding chart, which is down here, related to the symbol that we're wanting to buy, just so you can see what the price action and the trends were like before we bought that. So let's open up a Aristocrat and just take a look to see what the charts look like. So on the charts we highlight where our stop would be placed. Now one thing to note about the stop is that it's a fail-safe, which means that it's set in the market just in case the position or the order that once we enter the trade breaks down and the trend goes the opposite direction. As you can see, it's quite a distance because it's a fail-safe. As what I mentioned, it has a very small chance of getting hit. As percentage-wise, it's less than 5%. So out of 100 positions we take, 5% of them will hit this level. Now we do have a trailing stop, which I'll show you in an open position. And we also have a profit target, which gets us out if you hit a certain level. So after you can see that the price was closed at 30.65. And if you're happy, you can see the trend that's emerged from that before we took this position. This will give you enough information as to place the order and give you an idea of what the trend was like up into the lead up to buying this stock. So that's Aristocrat. Now let's go look at actually an open position. So once we place our order and we've filled, let's see how we manage that. So if we scroll down a little bit further, we're going to see the open positions table. Now there's a little bit extra information included in this in order to be able to track the position. One is we have the entry date where we entered on the week on Friday. We also have the price, tells us what we entered, and our initial stop loss. Now this table summarizes all our open positions, but there's no action needed until either really three things. If it hits our stop loss, we're already out. However, if it does close below our trailing, which is this condition here, that's the common condition we'll be exiting. If we close below our trailing stop, we exit at the market. So until you really see a comment, there's really nothing to do. And the opposite one would be if we close above the profit band, then we will take our profits at the next day at the open. And the same thing here, you have the corresponding chart that relates to the position that we've got open. Now let's take a look at Rio and see what this try to close below trailing stop looks like. So let's open up Rio. Now, we've highlighted to indicate what condition has been met for us to exit. Now, you can see, first of all, that the stop loss is down at 83.04. Our entry price was 102.09. And we've been in the stock for almost a month. 2 months, I mean. And you can see the trailing stop, which is the red line, the step red line. It's an adjustable volatility-based trailing stop, which means it will adjust according to market volatility and adjust wider or tighten according to that. Then above there is the green line, which is the profit band. So where it's highlighted in the circle, the yellow circle, that indicates that we've closed on that week below the red step line. So that means we're out of the market because of that very reason. As the trailing stop is engaged to protect the position, at the same time lock in profits. In this case, it's closed out for a small loss. As noted earlier, our stop loss, initial stop loss, is way further. So this is the primary exit that we'll be getting out of our position from, and an explanation to explain what happened. This will be the one you'll see more often. Now let's go look at actually if we hit the profit band and what that looks like. So let's open up ResMed, RMD. So this is ResMed. This is ResMed, the price chart. You can see we entered at 17.75, I mean, and we had an initial stop at 14.38. Once we've entered, our trailing stop already managed the risk and tightened the risk immediately. And on the third week, we closed above the green line, and that gave us the condition to exit because we're above the band. Now that occurred, we exit the next day at the market open. So this is the other occurrence that you'll find. It's not often, it's probably 5% of the time, but this resulted in a small profit. So there's the two major conditions you'll see up other than the initial stop loss, which is very rare. That's the one that we'll be exiting on. So on the table, that will be noted there. So when you see the note here, it means there's an action to be done. Other than that, there's very little maintenance required to maintain the open positions or to maintain your portfolio. Simply just monitor and see if there's any changes there. Now let's go open up the order sheet and have a look at how we could use this. If you're trading it yourself, this will help you do the calculations for allocation of the amount. So we click on that link, it's going to open up a new window. Now the best thing to do is to download this. So on the top right hand corner, it allows you to download it, which we'll do now. Once downloaded, we can then open up to edit and modify. So it's now been downloaded. Now I'm going to open this up and add some information for it. So first of all, if you're having orders placed for you through our desk, make sure, so there's a few things you need to do. You need to say yes to the stocks that you want to place the order with, the amount that you want to allocate to that stock. Now we suggest a minimum of 5,000 per position if you're having it managed, and the amount of units to be bought. And the price is calculated based on the closing price on Friday. So we're buying at market, and that's what we'll be doing for you. So this then is attached to your email and sent back to Equities Dealing. Once we receive your email, we will then respond back and we'll place the order for you for market open on Monday. The only positions, as you see with Rio and RMD, that we're exiting is in this box here. So that allows us to exit those positions for you. So this is our instruction from you to say we want to place the order or exit those positions. And as you can see, you can select, and if you're doing all the portfolio, you would have to put yes and the corresponding amount for us to place that. We suggest minimum 5,000 and equal allocation, meaning you put the same amount, and that will allow us to allocate accordingly and place the orders for you. So this is pretty much all for the order sheet. Once you have attached, you'll receive this order sheet. The orders will come out once a week on a Saturday. Once you have received this order, fill in the details in the box, email it to Equity Dealing, and we'll handle the rest. Have any questions, feel free to email Equity Dealing or give me a call on my direct line. Other than that, I'll see you in the next video.